U.S. October unemployment rate, unavailable. A new round of dollar decline may have begun. Trump signed the temporary funding bill passed by both chambers of Congress, ending the longest U.S. government shutdown in history, which lasted 43 days. However, the government has not yet released October employment data and will not obtain unemployment rate figures. The October CPI release has also been delayed. More Federal Reserve officials are adopting a cautious stance toward a potential rate cut in December, citing inflation still far from the 2% target and signs of labor market stability following 2 rate cuts earlier this year. Investors are reassessing the Fed's December policy decision. Market expectations for a 25 basis point rate cut have dropped to just below 50%. The 10-year U.S. Treasury yield rebounded to 4.11%, while the U.S. dollar index briefly fell below 99, hitting a 2-week low. Although liquidity shocks have eased somewhat, the lack of data has led to differing views on whether labor market weakness stems from the supply or demand side. The Fed is concerned that cutting rates too quickly could reignite inflation. Economic uncertainty, combined with fears of a tech stock bubble in U.S. equities, is accelerating the process of de-dollarization. Moreover, significant divergence in monetary policy between the Fed and other major central banks is expected to increase dollar volatility and fuel further downside. The ECB may have ended its rate cut cycle, while Japan could be forced to hike rates earlier due to rising imported inflation pressures. Japanese Finance Minister Kaoru Katayama issued verbal warnings for 2 consecutive days regarding the yen's weakness. Daily charts show the dollar index has fallen below the 100 threshold, with the AO indicator signaling strengthening downward momentum. If the dollar further breaks below 99.0, it may indicate the end of the rebound that began in late September. On a broader cycle, the dollar is likely to continue its downward trend that started in January 2025. If it breaks below the support near 97.6, the downside could expand further, potentially heading toward the 95.20 level in the medium term.